Hello, everybody. I'm Zoe, Events Director at Brand Finance UK. Thank you very much for joining us for Brand Finance Kenya Forum, hosted in association with Strathmore Business School. Just a quick note on housekeeping. The format of the hour-long webinar today will follow two presentations from Brand Finance, followed by guest speakers and a discussion. You can submit any questions to our presenters through the Q&A facility, and we will be sharing a recording of the webinar after the session. And I'm now very pleased to hand over to Walter Serem to introduce today's event. Thanks, Walter.
Thank you, Zoe. Good morning, everyone. I am Walter Serem, Regional Director for Brand Finance East Africa, sitting in Nairobi. I'd like to welcome you officially to this Brand Finance 2024 Brand Forum to celebrate the 25 most valuable and strongest brands in Kenya. I know it's been a challenging year for a lot of marketeers, all alike. New political landscape, new policies, of course, the foreign exchange hit against the Kenya shilling, of course, the shrinking consumer wallet. And I must commend the marketeers for being very creative and ingenious in the way they approach their marketing efforts. In this case, I'll now introduce Mike Rocha to take it from here. And I'll see you again in a bit. Enjoy yourself. Thank you.
Thanks, Walter. So yeah, delighted to be here, kicking things off for the Brand Finance Kenya Forum 2024. So what I'm going to be, my talk today is on the role of sustainability in rebuilding trust. Now, this was actually a talk that I first gave at Davos in January this year, when Brand Finance was launching its global 500 ranking, which is the sort of the crown jewels, as it were, of our year, of our sort of the many rankings and league tables that we produce. The global 500 is the most valuable 500 brands from across the world, and we launch at Davos every year. And so my talk at Davos was around sustainability and rebuilding trust, which were two of the big themes at Davos this year. So I hope you find this interesting, but that will hopefully just explain why some of what I'm talking about here is a more global perspective, looking at global brands, and then we'll move into Ollie Schmitz will talk about the Kenya study after that. So just a quick introduction to Brand Finance for those of you who may be a bit may not be aware of us. We work with brand owners and professional advisors around the world, answering their big questions about brand value, brand performance, and brand direction. So we help with value-based brand management. So that's helping organizations understanding how they're performing and how they can improve and grow the value of their brands over time. Brand analytics, so that's understanding how we can improve the effectiveness of our marketing, looking at things, for example, like the return on sponsorship investment or marketing investment, and thinking about using that analytics to then help make investment decisions and resource allocation decisions. We answer strategic questions, thinking through what direction we should take with a brand, all underpinned by that analytics, and also financial modeling to help give more confidence in those strategic decisions that may need to be made from time to time. And we work on transactions and disputes as well, and answering questions around, is this a good deal? What are we owed in this dispute, and helping with negotiations. We're a global organization present in over 20 countries, and we've been at the forefront of setting the standards in this space, as key members and drivers of the two key ISO standards around brand valuation and evaluation. All of the studies, the rankings and valuations that we produce are underpinned by an extensive amount of primary research and consumer data. Our Global Brand Equity Monitor is a piece of extensive research study we run every year that feeds into our brand strength analysis, speaking to over 150,000 respondents in over 40 countries, 30 sectors, and we value thousands of brands every year, and we've been doing that for many years now. And so all of this make sure that our valuations are very highly rigorous and data driven. So the global 500 this year, 2024, the total value of the 500, the most valuable 500 brands, reached $8.6 trillion this year. So continuing to grow, that's the highest the global 500, the highest value it's reached. And that value of 8.6 trillion represents 23% of the total enterprise value, or the total value of the businesses owning those brands. So, you know, we can see how important brands are and as assets for those organizations, contributing almost a quarter of their value. We also, continuing that theme of the role and the impact that brands have on business results, we have launched an ETF, an exchange traded fund, with LGIM, which is part of Legal & General, the global insurer, and we did some analysis with them prior to launching that ETF that demonstrated that the top 100 brands in that 500 outperformed their mega cap peers in the MSCI World Index. They delivered 23% more shareholder yield, 19% higher return on equity, and an 18% higher operating margin. So all of which to say that brands are significant assets for their organizations that can deliver significant business outperformance. And so these brands need to be managed, measured and managed and nurtured, and carefully managed, as much as any sort of physical asset that an organization may have. So this was the top 10, the global, the top 10 most valuable brands this year. Apple leapt into first position, and Microsoft also jumped a couple of places to reach second place. The total value of the technology brands in this top 10 was $1.6 trillion, and that represents 19% of the total value of the 500. So what we're seeing, and you'll be observing this as well, is you know, a huge concentration of power into the hands of a very small number of companies. And really that was the backdrop to Davos, and why trust was such an important theme, because it's really with power comes great responsibility, I suppose, and it's the brands that can maintain trust in this kind of environment that are going to succeed. And we saw some of these issues that we were talking about in Davos around job security, AI, the power going into into the hands of a small number of companies. We sort of see this starting to play out in our own data. Here you can see in certain technology-led industries grew very fast this year, and there were particular winners in terms of Microsoft and Nvidia, who are really kind of riding that wave of positivity around what AI may do, and that's sort of had a huge impact on their brand value as well as their business value. But we're also seeing headwinds in consumer sectors like restaurants, retail, food, where the difficulties for consumers, the cost of living, etc., are sort of affecting and creating a bit of a drag in those sectors. And so it's we can see the tensions that we were talking about at Davos also sort of playing out in the data. And as I say, it's the companies that are that have the most trust will be the ones that will succeed in where these tensions potentially start to build even further over time in the future. So talking about trust, we spotlight a couple of brands here in our study which have quite interesting examples of how trust can affect brand value. Trust is a key underpinning of any brand, really, and here we can see Tesla's brand value dropped by 12% this year. It actually fell out of the top 10 this year, and we can see that Tesla's global trust score also dropped, and that's quite a significant drop, to be honest, in terms of a year-on-year change. And the mood music around Tesla, and particularly around its sort of mercurial founder Elon Musk, has been relatively negative in the media, and we can see that playing through into consumer perceptions and playing through into brand value. On the other side of that coin, Microsoft is a brand that's built on incredibly solid trust foundation. So its value grew incredibly fast this year, up 78%. You can see in the middle of this chart that trust, we run with the data that we have from the research, we run what we call drivers analysis so to understand what are the key attributes that drive consideration of a brand in any particular sector. And in technology, the key driver is the top driver is trust. And Microsoft is second globally amongst all of the global tech brands on trust, so performing really well. And again, that is really underpinned by all of the work that they do on ethics and the principles for AI development, responsible tech, and all of that in turn is driven really by Satya Nadella at the top of that organization, where he kind of understands how important trust is as to give organizations permission to operate. So we've got some data as well on trust that helps to sort of helps us to kind of demonstrate this. We can see that this is again from that Global Brand Equity Monitor research I was talking about, where we can see there's a clear relationship between trust and consideration. Now, correlation is not the same as causation, but nevertheless, we can see that there is a very clear link here between the trust that a brand has and whether you're likely to consider that brand in the future, and that's across all sectors. So, we understand that trust is a fundamental foundation of value creation. Whether we're talking about a value of a business or a value of a brand, trust is key. And I think this brand value chain that I'm about to take you through helps us to understand why trust is so important. If we think about how strong brands create value for customers, they create value because they provide utility to consumers and to customers. They help simplify choice. In a cluttered marketplace with many options, we can narrow those options down to a smaller subset of trusted brands. That speeds up our decision-making process. So through familiarity of those brands, that helps us to simplify choice. We hate losing time and spending time on things, and we want to get there fast. So that's a first key value that strong brands and trusted brands give us. They reduce perceived risk. So we understand that they're going to deliver on their promise, and we hate the pain. We feel the pain of loss twice as much as that we feel the happiness from gain. So we're very keen as human beings to avoid loss and avoid risk. So trusted brands play a key role there. And the best brands have emotional appeal and make you want to be part of, proud to be or part of their community. So these three are the fundamental ways that strong brands create value for customers. And in turn, that value that they create for customers influences behavior. It means that we're more likely to consider. It means we're more likely to repeat purchase, which drives revenue. We're more likely to pay a price premium, which increases profit margins. All of that creates a more reliable earnings stream, lower risk, and all of that together creates value. And then if we think about trust here, I feel there are three areas. You can unpack trust in three ways. First of all, there's a competence. It won't let me down. Secondly, benevolence. So a brand that's on my side, if you think about all of those strong brands that are really underpinned by really strong customer service, then ultimately a brand that does the right thing, that has integrity. And you can, so these three elements of trust all then feed into these performance and appeal elements that I've been talking about. And again, as I said, the strongest brands will deliver on all three of these areas. So talking about integrity, that third component of trust, and so now thinking about the relationship between integrity, sustainability, and trust. Again, we've got some data here that demonstrates that we're starting to see a relationship between perceptions that an organization runs its operations sustainably, and perceptions that it supports causes that customers care about. These two things do have a relationship with trust. And again, this is from our global brand equity monitor data. And then in terms of drivers analysis, we looked at I've just pulled three examples here: apparel, automotive, and consumer electronics. And the green bar is the combination of those two attributes about working hard to limit the effect of its operations and supports causes I care about. We can see that those two things now combined are becoming incredibly important for consumers, in addition to value for money in the kind of the cost of living crisis that many people are experiencing around the world. But the sustainability is key, is becoming a really important factor for consumers globally. and we see the same in business to business. So this is a study that we run in IT services. And on the right hand side, you can see drivers of reputation, where the E, S, and G elements are really high for business to business in terms of what drives the reputation of a brand. And they're also pretty high even when it comes to making those decisions and considering a brand. So sustainability is becoming more and more important in driving choice, both in consumer and in business to business marketing. So what if it's becoming more important, then what should brands do? What in terms of communicating what they're doing in terms of their sustainability initiatives? Well, unfortunately, what we've seen is many brands getting hauled over the coals for greenwashing. I've just sort of shown a few examples here, but it's become quite tricky at times to communicate and then get called out potentially for unsupportable claims. And what we've ended up seeing, unfortunately, is the rise of green hushing as a result. So organizations, rather than saying anything about their sort of initiatives in the sustainability space, rather just staying quiet, not putting their head above the parapet and kind of playing it safe. But if we want to become a more sustainable world, ultimately, there needs to be a conversation, there needs to be a dialogue around these things. We want organizations to be talking about these things because, as a planet, we have to sort of deal with these issues. So we see the green hushing as being particularly unhelpful. And even the most valuable brands in the world and the best brand builders in the world in Apple have struggled with this challenge. Apple has gone out with very bold claims around carbon neutrality, and it launched the first, what it claimed to be the first completely carbon neutral watch. But then various people came out and criticized that claim about carbon neutrality of the Apple Watch, saying that it was only due to a carbon credit system that Apple had paid into, and that carbon credit system wasn't very good, and so it's a minefield even for the best brands. But what I'm gonna talk in a moment about is new regulation that's coming, international regulation that's coming along the road very soon, that will hopefully make this easier. We're also, it's also been very tricky for investors. So we saw the likes of Vanguard and BlackRock really sort of stepping in into this ESG space and really sort of leading the development of investment vehicles in ESG. But we've seen BlackRock laying people off now in that ESG space, pulling back. Larry Fink, the CEO of BlackRock, has come out saying he's kind of ashamed that that ESG has become this politicized topic. So but again, these regulations that are coming in should make things, should improve things. So on the left-hand side, what we've had up until now is a whole host of individual regulations that have all been created separately on a range of different sustainability areas like water or financial materiality, biodiversity, etc. And with the initiatives from the IFRS and ISSB and from the EU, what we're going to see moving forward is a consolidation of all of these different independent regulations into one set of common standards that will drive transparency, comparability and rigor in non-financial reporting. So how companies then report on their activities. So what I think that is going to do, is to make it easier as a customer to be able to compare and compare organizations and see how they're doing. So you'll have more confidence. There'll be more confidence in the ability to compare brands. And it's going to become increasingly hard to greenwash as a result. So more and more organizations are going to be forced to take action because it's all going to be kind of out there and measurable and very visible if you're not taking action as a business. And if you're taking action, if you're a leader in this space, then it's going to be easier to communicate because you're going to have the confidence that you've got the data to back your claims and you won't have that risk of greenwashing. So, so I think sustainability moving forward as a result of this initiative will give certain leading brands the opportunity to build brand leadership and build sustainability into their brands and use it as a way of continuing to drive differentiation and leadership in their markets. So I hope that was interesting, and with that I'm going to hand over to Ollie Schmitz.
Very good. Thanks very much, Mike, and good morning to everyone. My name is Ollie Schmitz. I'm the Managing Director for Brand Finance Africa. I thought just to start, I would like to explain my shirt. I wanted to wear my best African shirt this morning, and my wife nearly died when she saw what I came up with. But I'll explain the same to you that I explained to her. This is my best shirt because in 2013, when I was living in a village in Botswana, my friend Fiannce, she went home to Zambia and she brought back this material and she gave it to me as a present. And then I took this material and I took it to my friend Felix, who was from Zimbabwe, and he made me this shirt. And now I have to admit, it's probably not the most fashionable. It doesn't fit the best, but it's my best shirt because it has a story. It's my best shirt because it was made by an African for an African in Africa. And so really, I thought that fits very well with the theme that we're talking about. Brands made in Africa for Africans. And I just thought that this morning we want to be here so that we can acknowledge some of those strong African brands, particularly this morning, the top 25 Kenyan brands. So just, it looks like I don't actually have control. Georgia, do you mind flipping just to the next slide, please?
Sure.
Thank you. So maybe just a note on how we calculate brand value. The primary approach that we use is the royalty relief methodology, and it assumes that if you didn't own your own brand, you would have to pay a third party to license their brand. And so this approach, it's really based on commercial reality. Now, there are essentially 4 elements to the valuation. The first, on the bottom left, is brand strength, which is something that we'll talk a little bit throughout the presentation. The second is the brand impact. So what roles do brand have in the industry in which you're operating? The third is brand risk, and we use brand risk to discount the future value of a brand to its value today. Now, in Africa, generally, we have a significantly higher risk than more developed markets. For instance, we see that brands in the UK, they have risk rates of around 8%, versus in Kenya, we have risk rates of about 18%. So that's more than double the amount of risk. Meaning that in the UK, if you had 100 shillings in 5 years' time, it would be worth 68 shillings, where in Kenya, that same 100 shillings would only be worth 47 shillings in 5 years' time. And that's how significant risk is. We lose 30% just because of risk. And then that fourth element is that financial outlook. It's the historic and the forecast financial performance of the brand. And so really these 4 elements combined together help us to determine the brand value. And so today we're going to recognize the top 10 strongest brands in Kenya, and then also the top 10 most valuable brands in Kenya. But going on to the next slide, it's important to understand that brand strength is only one component of brand value. Some brands, they want to be the strongest, but that doesn't automatically mean that they will be the most valuable, and vice versa. So if I had to ask you the 3 brands on your screen at the moment, Toyota, Ferrari, Mercedes-Benz, which one is the strongest? What would you say? Well, the results of our analysis on the next slide, it demonstrates that Ferrari is the strongest brand. Possibly no surprise there, but closely followed by Toyota, which is a stronger brand than Mercedes-Benz. Now, you may think, well, that's strange. But where Toyota lacks overall appeal when compared to Mercedes, it's also sold 3 times the amount of cars in 2023, which gives it power. But then we may ask the question, well, out of these 3 brands, which one then is the most valuable? Well, the answer is on our next slide. The most valuable is Mercedes-Benz. So it's the weakest out of the 3, but by far the most valuable. And why is that? It's because Mercedes has the balance of appeal, price premium, and good sales, and that makes it the most valuable of those 3 brands. And so brand strength plays a key role. And why do strong brands matter? Well, on the following slide, we can demonstrate that when we value a brand, we consider its impact on all internal and external stakeholders. For example, the impact on sales on the very left-hand side. Our research allows us to explain customer consideration for a brand. So for every 1 point increase in consideration that consumers have for your brand, we can demonstrate the impact on market share and on sales. And so that small increment in consideration leads to a higher brand value and also a higher share price. We can also prove the impact of strong brands on finance costs, on share price growth, and other business dimensions too. So brand valuation, it's not limited to just proving the success of marketing alone. Rather, it should be a measure of overall business function. So how do we calculate then brand strength? So we use quantitative research and a balanced scorecard approach. And we assess the strength of the brand by calculating a score out of 100 in the context of its sector. We look at 3 components: brand investment, or so its presence. We look at brand equity. So how do customers, investors, and other stakeholders feel about that brand? And then how does that translate to brand performance? So how does that convert to sales and profitability and overall loyalty? And that then is a direct input into our brand value. So having given you the 2-minute explanation on brand strength and why strength is so important, friends, we'd like to please announce now the top 10 strongest brands for Kenya for 2024. Excellent. So, friends, there we have our top 10, and they're summarized here. I'm on the next slide. In terms of the strongest brands, by brand strength index, Equity Bank remains the strongest brand in Kenya with a score of 92.5 out of 100. And that's closely followed by competitors KCB and Co-op Bank, ranked at number 4. What's interesting is that we see 3 insurance brands jump into the top 10 strongest brands: Britam, Jubilee, and CRC Insurance. All have jumped in brand strength by around 30 points, which is significant. And we may ask, why the big increase? Well, it's the first year that Brand Finance, we've been able to conduct consumer research on insurance brands in the Kenyan market. And it just shows that our historic research was conservative, but now we can more accurately demonstrate the strength of these insurance brands in the market. And so we see 7 financial services brands in the top 10, 8 if we include M-Pesa. And so that just speaks to the power and competitive market of financial services in Kenya, but also to the importance of these brands and the role that they play in the lives of the Kenyan people. Now, what's impressive is that for Even for sectors where we previously had research, we see that the average brand strength has been increasing. Now, in many global markets, we see brand strength declining because of increased risk and poor performance. But in Kenya, we see growth amongst all of the top 10 brands. And why? It's because we see higher levels of brand equity measures like consideration and usage. Consumers in Kenya, they're generally happier and more connected to strong Kenyan brands. Now, what this also means is that the average brand strength of the top 10 brands has increased from 76 points in 2023 to 86 points in 2024, just again demonstrating the strength of these brands. And maybe just to further illustrate the strength of Kenyan brands, we can consider the strength of Equity Bank, KCB, and Britam. So they are ranked first, second, and third, respectively, in Kenya. So that's that table on the left-hand side. How do they compare to the strongest brands in Africa? Well, they still ranked first, third, and fifth, respectively. And impressively, if we compare Equity and KCB to the strongest banking brands in the world, they are ranked second and fifth. Now, interesting that BCA, the strongest banking brand, is 6 times bigger than Equity, and ICBC at number 6 is 140 times bigger than Equity. Yet Equity is a stronger brand. It's a real David versus Goliath type of story. But friends, that's enough about brand strength. Remember, brand strength is only one component of brand value. And so at this point, we'd like to now present the top 10 most valuable brands in Kenya for 2024. And so there we have our top 10 most valuable brands for 2024, and we have a new winner in 2024, Equity Bank. So not only is Equity Bank the strongest brand in Kenya, but also the most valuable brand. So well done to the Equity Bank team. Now, it's interesting that in 2024, 55% of brand value among the top 25 Kenyan brands comes from banking, and 19% comes from telecoms. And I think that's really representative of what we see here. Now, one thing on brand strength, we saw that all the brands were increasing, but amongst our top 10, we see that 6 have declined in brand value. And actually, out of the 25 brands in the study, 14% have declined in brand value. And so just demonstrating some of the challenges that the headwinds that Kenyan brands are facing. In fact, overall, the top 25 in value has declined 6% from 300 billion shillings, from 326 billion shillings to 300 billion shillings. And one of the main reasons for that is that increased market risk. But maybe just one last point, one brand that is thriving. CRC is our fastest growing brand for 2024. So it's grown 63% from its valuation in 2023, and a large proportion is due to its increased brand strength that we've seen for many insurance companies, but particularly we saw improvements on various facets like customer loyalty, brand management, and overall market performance. And so while CRC is ranked 16th out of the top 25 with a value of 1.9 billion, we want to say congratulations to the CRC team, and we look forward to tracking your growth in the years to come. And so on that note, just well done to our top 25 most valuable Kenyan brands. And we look forward to enjoying a discussion about some of the performances now following this presentation. So thank you very much. And I'd like to hand over to Walter now.
Thank you, Ollie. Thank you, Mike. I think I'll take this opportunity to welcome Moses and Jackie to have a light discussion around what we've seen, and hopefully we can open a question and answer session. I think it's exciting to see big shakes and big moves within the industry. So over to you, Jackie and Moses. Welcome.
Thank you very much, Walter.
Thanks, Walter. Moses, I'll let you go. Very interesting.
Well,
I see.
Yeah, that was very interesting. I think for me, it's very interesting to see, first of all, the macro or global perspective that was shared earlier, and just to see that, the top 500 brands valued at over $8.6 trillion. And again, I think the survey, shows that, with 150,000 respondents, this is comprehensive in terms of the details when we see the macro. I think for me, the things that sort of surprised me when looking at the global perspective, I think first of all was seeing TikTok in the top 10, given that it's a relatively new technology brand, and the fact that it's rubbing shoulders with those that are much more mature, like the likes of Apple and others that we saw there. And then also seeing ICBC from China, the bank, which also seemed to be a bit of a surprise for me to see them within the top 10. And then in summarizing again, I think the global perspective, 8 out of 10 of the top brands were actually technology driven or technology based, the likes of Samsung and so forth over there. But again, it was also very fascinating for me as somebody who's been tracking AI in a very, comprehensive way, to see that NVIDIA also managed to crack or is growing significantly, showing that even a brand that is more B2B is also globally relevant and globally visible. Tesla, we know, is struggling globally, and you can see that, just the fact that the trust issue has sort of compromised the brand significantly. I love the detail that was presented around the importance of trust and how trust plays a significant role in how brands are valued and also ultimately their brand strength. Microsoft, again, coming out very strong, the fact that they've gone very ethical and are very big on how they're doing their AI in a sustainable and sort of ethical way, again, plays back into this issue of trust and really how that familiarity drives performance and ultimately the appeal of a brand. I think the other thing that was a very big theme globally and also increasingly in Kenya is the issue of sustainability. And we see that the fact that many brands are having to sort of, both in B2C and B2B scenarios, create a very strong aspect of sustainability. So not just a sort of a light presentation of it, but rather it has to be integral to the business and then by extension, the brand for people to trust it. Coming to the Kenyan scenario, I must say that, first of all, Oli, I loved your shirt. As you can see, I'm also representing Kenya and Africa. So I did go for the African theme just like you. And I think, looking at elements such as, what makes for a strong brand. Very nice to see NCBA there once again, Jackie, in number 10. I think that was interesting. A little bit surprised that M-Pesa is at number 9. I would have expected it to be higher. And then CIC Group for me, I think was a fantastic, unexpected surprise. And I think they've been progressively, as you've seen, maybe over the last decade or so, been working on their brand in many significant ways. So it's very interesting to see them crack that list. Jubilee, yet another homegrown brand at number 7. Safaricom at number 6 for me was a bit surprising. I would have expected them to be higher. But again, it was very interesting to see the methodology behind how these numbers were arrived at, meaning that this is really scientific and it's following some form of methodology that is detailed. Tusker at number 5, again, I think that is not too surprising given that it's one of the biggest beverage brands in the country. Compaq at number 4, Britam, I think a big surprise as well. Very nice to see them also cracking the top 10 in the strongest brands. And more importantly, I think it's testament to the fact that they've really invested a lot in a lot of the activities on the ground. KCB at number 2 and Equity at number 1. I would have said maybe it could have been either of the two at the top, but very interesting to see that Equity Bank has managed to achieve number 1. And I think the mention that 3 insurance brands are now within the top 10 of strongest brands is also good, seeing that they rose by 30 points. Within the sort of financial services space, again, 8 of the top 10 being financial brands is also indicative of the fact that these brands are endemic and very well known within the marketplace. And I think the other thing to mention is that all the brands were homegrown. So I think that's very nice to note that, again, Kenyans are showing a clear affinity for homegrown brands. When it comes to the most valuable brands, again, I was happy to see I&M Bank at number 10. This is a brand I think over the last few years has been investing a great deal in building awareness, uptake, creating very localized products. And I think that was really good on their part. Tusker at 9 was interesting. Kenya Airways at number 8, very good. We can see Kenya Airways as the brand is recovering. I know, Jackie, you have a long history with Kenya Airways. So it's so good to see our national carrier coming up into the top 10 and growing again. We see Kenya Power at number 7. Again, maybe that was a little bit surprising. NCB at number 6. Congratulations, Jackie. That's your brand. Compaq at number 5. M-Pesa at number 4. Maybe a bit of a surprise given how the ubiquity of M-Pesa within the market. KCB at number 3, Safaricom at number 2, that would have been expected. And then again, Equity topping the numbers at number 1. So again, that was surprising. And I think they mentioned that 55% of the brands represented in the most valuable segment is also impressive. But all in all, I think CIC, the fastest growing brand, 63% growth, very impressive, and congratulations to them. So those are my remarks. Over to you, Jackie.
Thank you so much, Moses. Very similar observations from where I'm seated. But when I look at just top level, when I was looking at the comparison between the global and the Kenyan context, it's very interesting. So whilst finance doesn't feature heavily in the top 10 globally, in Kenya, you see a shift where the financial services or sector is now increasingly leading the way in that space. So a very interesting comparison. I think in the top 10 globally, we only saw the Chinese bank, while in Kenya, it's almost 8 if you combine with the insurance companies that are actually featuring as the top brands. So quite an interesting feature there. And I mean, the environment was difficult last year, and we really do need to give kudos to all the brands for really trying to make sure that they stay relevant, they remain not tone deaf. So interesting that even as Olive and Mike were speaking to it, financial sector is actually in the business of trust. And when you see, like in Kenya, majority of the top 10 brands are in the financial and insurance sector, it's interesting to sort of figure out, are we cracking trust now? Is that what we are saying? Let's see how that evolves. Sustainability remains strong. Very interesting to see sustainability being a big driver in the motor industry. And then looking at regulation coming up and wondering how this will then help marketers to evolve. And when I selfishly look in the marketing space, in the business space that NCBA is operating in, as home of asset finance, being the leaders in this space, and having boldly introduced EV electric vehicle financing, and really taking on sustainability and the electric side of things seriously. Will this be the start or the driver of sustainability relevance in the country within the financial sector? Interesting to also look at that. And regulation is not far behind. I would have loved to see how this regulation is likely to affect Africa, even as we talk about regulation and look at and see the fact that in the motor industry, sustainability is a big driver. What does that mean? How quickly is this regulation likely to force, for example, the financial services to look at how they're financing vehicles? Because NCBA has a pot of 2 billion to support sustainability initiatives within the green space, but we don't see the uptake as much as we'd like to see it. We see a lack of infrastructure in terms of charging stations. For the people in Kenya who saw us talk to our commitments in sustainability, we have electric charging ports to sort of try and promote the uptake of EV vehicles, but there seems to be a lack of uptake. So does regulation, or will regulation come in and force this in the market? Walter, it would have been interesting to sort of maybe look at how that will look like, or maybe for marketers this year, it's something we need to sort of look widely and ask ourselves, the environment in which we are operating and the regulation that is likely to catch up with us, especially from Europe, how will that shape how we proceed? And then how can we as marketers then find the right balance of communicating sustainability in a much more relatable and non-controversial ways? We've seen some serious reputational risks highlighted by some of the corporates and how they've greenwashed sustainability. And I think it will be a lesson for us as marketers, even as we head into 2024, to understand how we then do that in a much more credible way. Being a bit more selfish, looking at the brands again, interesting to see most valuable NCBA growing at 44%. Wow, that's huge, team brand finance. And interesting to also see the insurance sector now featuring significantly. And this could also talk to them being a lot more structured. So as financial institutions collectively, or rather as traditional banks, they become this other indirect competitor that we should probably also understand what is it that they're cracking and doing differently in the market. But interesting to sort of see what has shifted slightly. I think the insurance sector has destabilized the market a little bit. I was pleasantly surprised. I shouldn't say pleasantly surprised. I was also surprised at M-Pesa, Moses, because in the strongest, it also came as 9th. I would have thought it would be much higher. But then Mike gave us a very good context when he first demonstrated to us how strength does not necessarily equate to value, when he showed us the Ferrari and the Mercedes example. But nonetheless, interesting times we are operating in. The year, I think, continues to be a challenging one. A lot more uncertainty with almost, 64 countries going into elections this year. The macroeconomics seem to still be very difficult. So marketers will find a difficult task in trying to maintain relevance and credibility, while also driving, trust as one of the key focus areas for consideration. So back to you, Walter.
No, thank you very much, Jackie. Moses, I think this has been very insightful. I'm sorry, I'm using sustainable internet connectivity. Hence a bit of lag, so forgive me. Ollie, Moses, I didn't get the brief on the African shirt. but I believe next time I'll be on point. All the same, I like the fact that you said brands made and run by Africans for Africa. And I think this sort of rating, valuation reports and launch of the top 25 Kenyan most valuable and strongest brands is an indicator that we are actually supporting marketeers in terms of basically rewarding their hard work over the year. You'll actually realize that, and I think I want to actually reiterate this, that these valuations are basically based on merit as opposed to peer rating. So in any case, congratulations to the winners. I know there's been a lot of movers and shakers, but yes, ESG, sports sponsorship, and all non-mainstream AI, non-mainstream medias are actually coming into play. So I think I'll hand it over to Zoe to take us to the next level. Everybody, thank you for your participation. Thank you for coming on board. And it's exciting as we start rolling out some of these reports into the public space. It'll be good to get your feedback. Thank you very much.
Great, thanks very much, Walter, and thank you to all our speakers for joining the webinar today. And just to confirm, our webinars are online on our Brand Finance YouTube channel to view on demand, and we will be sharing a recording of this webinar after the session as well to all of our delegates. If you'd like further information on the topic discussed today or how to register for upcoming events, please email events@brandfinance.com. And thank you all once again for joining us today, and we look forward to reconnecting with you all soon. Thank you very much.